Welcome back to Stocklabs for another market recap. Just finished the second week of June. So June 10th, Friday, we ended the week. And it was at first kind of a choppy week, the first half through Wednesday maybe. And then Thursday, Friday, market really dumped out. We got some claims data for employment. Claims were up, or they were higher than expected. And then Friday, we got a CPI print that beat expectations. And by beat, I mean was worse for consumers, basically, because the inflation came in hotter than expected. I think we're expecting something around 8.2, 8.3, came in 8.6. So yeah, all the same stuff applies. Fed definitely going to stay aggressive, yada yada, bad for stocks, bad for the economy. And then coupled with the claims number, if the employment market's already sort of cracking, Fed hasn't even really fired off too many rate hikes yet. I mean, it's kind of a precarious situation for the economy slash market slash investors. Basically hate everything right now. So the major indices, you can imagine, did not do so hot. We had IWM down 4.5%, and that was the best of the sort of indices. The Dow was also down 4.5%, S&P down 5%, and the Nasdaq still leading to the downside, almost negative 6% for the week. So tech is obviously getting hit much harder than everything else, with the rate and credit markets sort of trading wildly all the time. Gold, decent up week, up 1%. People have been pretty safe in gold. Same thing with oil. I mean, I think this is a weekly closing high for crude oil. So still strong. That trend is still strong with the war and supply issues and all of that stuff. TLT got hit again. I think it was starting to maybe think about bottoming when the claims data was coming in, kind of weak. I mean, the number of claims was strong, but with the employment market seemingly weakening, TLT looked like it was going to try and find sort of a bottom with rates. But when the CPI print hit, I mean, that all went out the window. It was like, bonds went back into free fall on Friday. So, yeah, and I think I saw some stats that for something like risk parity, like if you're long stocks and bonds in like a 60-40 mix, it's like the worst start to a year ever, since sort of those type of portfolio strategies have been invented. So yeah, a lot of pain everywhere for investors. We have our breadth by industry. So you can see that by the end of the week, basically everything got sold wholesale. Industrial's worst performer, down 4.7%, median basis. Services, 4.7%. Healthcare, 3.9%. Consumer down 4%. Tech down 4.4%. I mean, it's all even materials. Materials stocks struggled a little bit just because now this trade is sort of has its eyes on a recession, which even if the raw commodities stay high, if the demand, the stocks will start pricing in lack of demand before the raw commodity does. There's a physical market associated with the commodity, but the materials stocks, I mean, they're just stocks. They're securities that people bet on one way or another. And then as for subsectors, not a single one up 5%, not even a single one up 2%. So basically no upside breadth from a sector perspective. Interestingly, the burritos were the top sector, and I think I saw it was either Thursday or Friday morning. These stocks were up big in the pre-market at some point. I didn't check how they finished that day, but I mean, they closed the week as quote unquote the top sector, up almost 2% on a median basis. And on the downside, just loaded with everything that you can imagine: banks, utilities, airlines, services, all sorts of stuff. And we've got, let's see, 25, 50, 75, 74 sectors down over 5%. So few weeks back, we had that 1 week where it looked like we had reversed sort of the breadth trend, where we had 100 some sectors up like 5%, but that's all sort of negated, with these last couple of weeks of flushes. Yeah. So we will check breadth from a market cap standpoint. If I can find my screen. Okay. So 1 to 5 billion cap, down 5%. So kind of in line with the market. Down 5%, same thing for 5 to 10 billion. 10 to 50 billion, down 4.7%. I mean, so this is pretty uniform selling across market caps. 50 to 100 billion, down 4.6%. I mean, slightly better, but not anything that you would consider notable. And over 100 billion, down 4.3%. So yeah, every single, the sectors were all down by anywhere from 3 to 4%. And then across market caps as well, everything was down 4 or 5%. So there's not any sort of pattern like, hey, we're hiding in large cap healthcare or mid cap, regional banks or like anything like that. Everything is being sold. So not a whole lot of conclusions to draw from this. We will check intelligence for the coming week to see what we might divine from this. Okay, so this is actually a little more constructive than what we've seen in some of the more recent weeks. There's actually a result set here. Oh, and I should mention, somebody requested if I can go back and check the performance of like last week's intelligence stuff. So last week we had TECS as the only thing rated bullish for the week. TECS is short NASDAQ, and the NASDAQ finished we said it was like down 6% for the week or something like that. And TEX itself, I think intelligence was saying to look for something like 7% for the week. And let me just see. And yeah, so did way better than that. Up 20% for the week. Actually up 12% just on Friday. So yeah, big win for intelligence on that one. Let me go back to this week. So this is for the coming week. We have short China. We have bullish semiconductors. So semiconductor trade's been really sloppy with the NASDAQ, but presumably we'll try to bounce this week. Same thing for Russell. And is this natural gas? I don't know if this is natural gas stocks or if this is a commodity ETF. I have a feeling this is a commodity. I have it like similar to UNG or something like that, but I might be wrong. Anyway, yeah, natural gas. We got material or miners and metals, energy. So energy has been a strong uptrend anyway, but it looks like it's going to continue that. Industrials and Brent crude. I don't know if anyone trades specifically Brent crude, but oil in general, commodity market, um, should be pretty good. So yeah, this would be looking for some sort of, if a handful of these play out, the market is going to generally bounce this week for that to happen. And let's just reverse it and see what we're looking for on the downside. Okay, BIS, ultra short biotech. So the short ETF is rated bearish, which means biotech should bounce. So that should be another sort of bullish signal for the market. Let me just reverse this. Let's go top to bottom. Okay, inverse big banks. So big banks should bounce this week because this is a bear ETF. It's rated bearish, double negative, bullish. Bear Dow Jones internet stocks. So that would be bullish internet stocks from this Dow index. I can't imagine what's in that. I don't know if Amazon would qualify for that, but maybe something like CRM or like things like that. I don't know. You can look at the holdings in the ETF. JNUG rated bearish, so gold bearish for the week. But also this is an inverse gold ETF rated bearish. So a little bit of a mixed signal there between these two. Digital Revolution ETF bearish. I imagine this has stuff to do with blockchain. Oh, actually probably NFTs because NFTZ. Yeah, very smart. So NFTs bearish this week. If we got any JPEG traders out there. And what else? Drip rated bearish. So that would be bullish for the oil and gas trade, which we saw the bullish ETFs on the bullish side of this screen. Cloud computing rated bearish. So SaaS stocks probably still not going to do too much this week. And what else do we have here? Okay, another blockchain ETF. Bank ETF. Okay, so we have the big bank inverse rated bearish, but we also have this bank. This is a bullish ETF, bullish bank ETF rated bearish as well. So hard to say with the banks then. This ETF up top probably isn't that liquid. I'm sure more people are trading the FAS one. So if I had to pick one to rely on, be FAS. And then, like we said, ultra short biotech is rated bearish, so bullish biotech this week. You could probably look at something like Labu or XBI, whatever you want to do with that. But at least we have, decent results set here. So we had stuff on the bullish side. And we had some stuff on the bearish side too. So I'm going to save this so I can go back to it easier next week when we sort of audit this. So I just froze the screen and dumped them into here. This is a watch list now. So these results will stay here even if the screen changes results during the week, which it will. Okay, let's go back to this. Okay. Yep. Okay. So semiconductors, short China, bullish the commodity trade. I mean, honestly, that's probably your best bet for the week. Just stick with the commodity trade. I mean, keep an eye on some more of if I forget, I haven't looked what economic data comes out this week, but if stuff starts looking more recessionary, then that trade will also probably struggle. But for the time being, I mean, it's still sort of a trend following thing, and it's rated bullish for this week. As for the past week, we almost got an oversold signal on the market. We needed a 2.04 on the hybrid algo. We got to 2.06 by the close on Friday. Actually, during the day, we were down around 2.01, 2.02. I was watching it, but by the close, the score had lifted, even though the market closed basically on the lows. This factors in more than just the actual price. So I would look for something like maybe one of these oversold signals to hit early in the week, Monday, Tuesday, somewhere around there. And then from there, play basically the long side of the tape into the end of the week for a bounce. At least that's kind of how I'm going to play it. So yeah, thanks for everybody tuning in. Hope you guys have a good weekend. And we'll talk to you again next week. See ya.